It starts with the question, which seems like a really straightforward question of just asking, who's the greatest investor of all time? It doesn't seem like a hard question to answer. It should be an analytic answer. It's just like a number who's had the best performance.
Yeah.
But then you can split this different ways. So, who is the wealthiest investor of all time? That answer is Warren Buffett. Who's the greatest investor of all time in terms of like long-term average annual returns? It's Jim Simons by a mile. And like it's not even close. Warren Buffett's long-term average annual returns are about 21% per year. Jim Simons are like 66% per year after his ridiculous fees. He's like in a different universe. But Warren Buffett is like way wealthier. And Jim Simons is like a decabillionaire himself. And this is like a crazy to say like he's not as rich sounds crazy. But to parse that out, the reason that Warren Buffett has earned one third of the returns, but he's like 10 times as wealthy, is because Warren Buffett has been investing for 80 years. And so even though he's not the greatest investor of all time in annual returns, he has so much endurance in terms of what he's done that by a mile, he is the wealthiest, which to me, that gets into a really interesting point, which is how do you become a great investor? And most people, when they hear that, what they think of is like, how can I earn the highest returns? What are the highest returns that I can earn this year and over the next 5 years, over the next 10 years? And that's not bad. That can be a great thing to do. But to me, if the goal is to maximize the dollars that you have, just what's the way that I can maximize the amount of dollars I accumulate over the course of my life? Then the answer to that question, the huge majority of the time, is not earning the highest returns. It's what are the best returns that you can earn for the longest period of time, which usually aren't the highest returns that are out there because maybe you can earn, like maybe you can double your money this year, but can you do that for 50 years in a row? Like probably not. But could you earn 10% annual returns for 50 years? Yeah, you can totally do that and generate an enormous sum of wealth. All compounding is returns to the power of time. Like time is the exponent. And so that's to me what you want to maximize. And that's why Warren Buffett is, in my mind, and it seems like an easy answer, the greatest investor of all time, even though his returns are probably not even in the top 20% of annualized returns among professional investors. The math behind it is 99% of his wealth was accumulated after his 50th birthday, and 97% came after his 65th birthday, which is a really obvious thing if you think about how compounding works. Like it's always in the extreme later end of years that the numbers just start getting ridiculous. Compounding is just like, it starts slow and then it's boring. And for 10 years, it's boring. For 20 years, it starts to get pretty cool. And then 30 years, you're like, wow. And then 40, 50 years, it's like, holy, like it just explodes into something incredible. There's a friend of mine named Michael Batnick who once explained compound growth. And I think the most easy way to comprehend, which is if I ask you, what is 8 plus 8 plus 8 plus 8, you can figure that out in your head in 3 seconds. Like anyone can do that. That's no problem. But if I say, what is 8 times 8 times 8 times 8 times 8, like your head's going to explode trying to think about it. It's like all compounding is never intuitive. And that's why if we look at someone like Buffett, we in the financial industry have spent so much time trying to answer the question, how has he done it? And we go into all this detail about how he thinks about moats and business models and market cycles and valuations, which are all important topics. But we know that literally 99% of the answer to the question, how has he accumulated this much wealth, is just that he's been a good investor for 80 years. It's just the time. And if Buffett had retired at age 60, like a normal person might, no one would have ever heard of him. He would have been like one of hundreds of people who retired with a couple $100 million and like moved to Florida to play golf. He never would have been a household name. He would have been a great investor, of course, but there's a lot of great investors out there. The only reason he became a household name is just his endurance and his longevity. That's it. And that's why if you go back to like even the late 1990s, not that long ago, Warren Buffett was known within circles, like within investing circles. People knew who he was, but he didn't become a household name until the early and mid 2000s, that's when the compounding took his net worth to become worth 20 billion, 50 billion, 100 billion, where he is right now. It's just the amount of time he's been doing it for.